Ever wondered how to read and interpret candle volume in different time frames in stock trading? Well, your curiosity is about to be satiated. Welcome to this deep dive into the fascinating world of candle volume. Candle volume, to put it simply, is the measure of how much a stock has been traded during a specific period. It's a vital tool in stock trading, giving us insights into the strength or weakness of a price move. It can help us determine whether a trend is likely to continue or if a reversal is on the horizon. Now, understanding candle volume in different time frames is a bit of an art, but worry not. This video will guide you through it step by step. We'll explore how to interpret this crucial data in various time frames, aiding you in making informed decisions in your trading journey. Ready to dive into the world of candle volume? Buckle up! Before we delve into time frames, let's grasp the basics of candle volume. Imagine a candlestick chart as a battlefield where the bulls and bears fight for dominance in the market. Each candlestick represents a round in this ongoing battle. The body of the candlestick, the rectangular part, tells us who won the round. If the body is filled, it means that the bears have won, pulling the closing price below the opening price. Conversely, if the body is hollow, the bulls have triumphed, pushing the closing price above the opening. But the battle doesn't stop there. The lines extending from the body, known as wicks, show us the highest and lowest prices that were reached in that round. The top wick shows us the highest price and the bottom wick reveals the lowest price. The longer the wick, the greater the tug of war between the bulls and bears. Now, here's where volume comes in. Volume is the number of shares or contracts traded in a security or market during a given period. It is often depicted as a histogram at the bottom of the chart. Each bar in the histogram corresponds to a candlestick, indicating the volume of trading for that round. Why is volume important, you ask? Well, volume gives weight to price moves. Imagine you're watching a tug-of-war match. If one side pulls the rope and wins, but only a few people were pulling, would you consider that a strong win? Probably not. But if a lot of people pulled the rope and won, you'd likely consider that a strong win. The same concept applies to the market. A price move on high volume is considered stronger and more significant than a price move on low volume. So, in essence, by looking at the candlestick and its corresponding volume, you're getting a snapshot of the fight between the bulls and the bears, and how strong or weak the winning move was. Now that we've got the basics down, let's move on to time frames. Time frames in stock trading can range from 1 minute to monthly. Let's focus on the shorter time frames first. In the world of stock trading, time frames are like the lenses through which we view the market. Each lens or time frame gives us a unique perspective. Shorter time frames, such as 1 minute, 5 minutes, and 15 minutes, provide a microscopic view into the market's movements. Consider the 1 minute time frame. It's like looking at the market through a high-powered microscope. Each candle represents just 60 seconds of trading activity. Here, high volume is like a loud shout in a quiet room. It's significant because it indicates a lot of trading activity in a very short period. This could be a sign of a strong trend, but it's important to remember that these trends can be fleeting. Now, let's zoom out a bit to the 5-minute time frame. Each candle in this frame represents 5 minutes of trading. A high volume here is more like a sustained cheer in a crowded stadium. Still significant, but not as abrupt. It indicates sustained interest or momentum in a particular direction. This could be a sign of a stronger trend that may last a bit longer than in the 1-minute frame. Finally, we have the 15-minute time frame. Each candle represents 15 minutes of trading activity. High volume in this frame could be seen as a chorus in a symphony, longer lasting and more harmonious. It shows that the trend has some staying power. It's not just a flash in the pan, it's a sustained movement that might be worth paying attention to. But remember, high volume doesn't always mean a trend will continue. It's a piece of the puzzle, not the entire picture. It's important to consider other factors like the overall market sentiment, news events, and technical indicators. Short time frames are great for quick trades, but what about longer periods? Let's find out. Scene script. Longer time frames like hourly, daily, and weekly charts provide a broader view of the market. Let's see how candle volume works here. In the world of trading, understanding the big picture is crucial. Longer time frames like hourly, daily, and weekly charts are the canvas for this big picture. The candle volume in these time frames plays a significant role in shaping our understanding of market trends. Imagine a daily chart. Each candle represents a whole day of trading. The volume shows how many shares have been traded that day. Now, if you see a large candle with high volume, it might suggest that something significant has occurred. Perhaps a new product launch, a big earnings announcement, or a shift in market sentiment. It's like a loud chorus in a symphony, signaling a change in the performance. Similarly, on a weekly chart, each candle represents an entire week. A high-volume week might mean that a significant event has unfolded, affecting the market in a broader sense. It could be a policy change, a geopolitical event, or a change in economic indicators. It's like a scene change in a play, indicating a shift in the storyline. Now, let's take an hourly chart. Each candle here represents an hour. High volume in an hourly chart could be indicative of a shorter-term trend. Maybe an influential trader has made a move, or a news event has stirred the market. It's like the weather changing throughout the day, affecting the immediate environment. In all these cases, high volume is like a spotlight, drawing our attention to significant market movements. It's a clue that a trend might be changing, and as traders, that's something we need to pay attention to. But remember, while high volume can signal a trend change, it's not a guarantee. It's a piece of the puzzle, a tool in our trading toolbox. We must consider it alongside other indicators and market information. With this knowledge, you can now read candle volume across any time frame. But how do you use this in your trading strategy? Let's explore. Understanding candle volume is one thing. Using it effectively in your trading strategy is another. Let's delve into how you can seamlessly incorporate this understanding into your trading strategy. Firstly, it's crucial to recognize that the volume of a candle can provide valuable insights into market sentiment. It's like a heartbeat, giving us a pulse of the market's mood. High volume generally indicates strong investor interest and a high level of liquidity, which can confirm trends and reversals. For instance, if you observe a long bullish candle paired with high volume, it's a strong indication that buyers are in control and the trend is likely to continue. On the flip side, a long bearish candle with high volume suggests that sellers are dominating and a downward trend could be underway. Conversely, low volume tends to signal a lack of investor interest and lower liquidity. This may indicate a weak trend, which could be a red flag for traders. If you spot a trend but the volume is low, it may be a sign that the trend is not well supported and could reverse. However, it's important to remember that volume should not be used in isolation. It's just one piece of the puzzle. Combining volume analysis with other technical indicators and chart patterns can provide a more complete picture and help you make more informed decisions. For example, if a high-volume bullish candle occurs at the same time as a breakout from a significant resistance level, it provides a more compelling case for a continuing upward trend. Remember, there's no one-size-fits-all approach to trading. What works for one trader may not work for another. It's all about finding a strategy that fits your trading style and risk tolerance. Incorporating candle volume into your trading strategy can provide valuable insights, help confirm trends and reversals, and potentially improve your trading performance. Keep in mind that practice makes perfect. So, keep observing, keep learning, and keep refining your strategy. With these insights, you're now better equipped to make informed trading decisions. So, we've embarked on a journey through the world of candle volume and timeframes. From the basics, we've garnered that candle volume is an invaluable tool, providing insights into market sentiment. It's like a looking glass into the heart of the market, revealing the strength behind price movements. We've seen how this tool, when viewed through different timeframes, can paint a more comprehensive picture. Whether it's the long-term monthly perspective or the more granular hourly view, each time frame has its unique story to tell. Then, we delved into incorporating candle volume into our trading strategy. It's about using this tool to make informed decisions, to spot potential reversals, and to identify strong trends. It's about making the market's heartbeat work for you. Remember, the key to successful trading lies not just in knowledge, but in its application. Happy trading!